Hey, what's up everybody, and welcome back to our channel Figuring Out Finance, where we bring you free trading education and technical analysis insights. Throughout this video, we're going to be recapping a trade that we took just less than 2 weeks ago, the USD CAD trade, and this is part 2 of our institutional trading strategy. The PDF guide that you can see on screen we'll release to you guys free of charge as soon as we hit 50 likes, okay? And also check out part 1 of our video. We've already hit 50 likes on that video. Please do download your free guide, okay? So check out that, it's already on YouTube. And throughout this free guide, I guess we contextualize the FX market. We've got lots of content and detail in terms of this trade, and we also go through other concepts like the Judas goat, okay? These are basically ways where the market makers induce you into going into the wrong trade, okay? The wrong side of the trade, I should say, because your liquidity is essential for them to fulfill their orders at the best prices, okay? Liquidity really is the lifeblood of the market. Alright guys, so 2 quick messages I want to get out of the way before we start the video to contextualize what we're about to discuss. Number 1, smart money concepts and order block strategies are one and the same thing. These concepts have been around for almost 100 years, okay? We're talking about the days of Livermore, Gantt and Wyckoff in the early 20th century, okay? These concepts have been around for a long time, and they've been recycled as a way to basically say that you need to look at the market in a different way in terms of liquidity, okay, and not support and resistance, okay? Support and resistance, trendline and Fibonacci are the incorrect ways to look at the market, especially when you're trading a market like Forex, which is all about liquidity manipulation and the whipsawing of price action. Number 2 is, if you're looking to become a trader yourself, please check out our trading education course. We've got a concept here that we describe as the ultimate move. In order, in our view, to apply smart money concepts, you need to know which haystack to look at, okay? And what I mean by that is smart money is brilliant for finding a needle in a haystack, okay? But what you need to know is which haystack to look at, and our trading strategy summarizes that beautifully in our view. And a quick shout out to our Patreon members, those who are supporting our YouTube channel and in return getting trade ideas that we track for our fund. With that being said, let's get into this beautiful trade for USD CAD. We've still got some positions running. Okay, we may take profit on the Monday, TP3, but we're likely to see the market continue higher. The USD is showing exceptional strength. As we can see from the market structure, we had a consolidation, we have a drive up, we had a retest of liquidity here, and we're expecting the market to potentially go much higher. Let's get into the video. Alright guys, so first thing first, in terms of what we were tracking 2 things really. We were tracking this structure here on the left hand side that you can see right there. We always know that support and resistance and these kinds of concepts are brilliant for inducing retail traders, and when you have buyers getting in on this stage, in terms of retail buyers, you know that their stops are going to be here, and that's what the market maker wants, okay? The market maker wants to create an inducement and then wipe through that liquidity, creating, I guess, a bit of a W pattern, if you like here, before then going up and continuing on its true direction, okay? So right from the get-go, we were looking at this liquidity, this support and resistance, and looking for retail traders to get trapped or liquidated, okay? And just as additional confluence, if you like, as well, we could see retail liquidity was likely to get in on this trade. And you might ask why, and that's because we've got the 786 fib, okay? The 786 fib and the structure here was likely to induce lots of retail traders to start buying early, whereby they get liquidated, okay? You can see their stops there, and we can also see the market push down, which would probably have also induced breakout traders, okay? So-called breakout traders who would have been engaging in really a selling frenzy, okay? Which was all picked up and absorbed by the market maker. Really, the story of this trade is twofold, okay? Trade 1, we took some small profit. It hit TP1 and then took us out a break even, and then we realized that we're looking at a different Wyckoff schematic, okay? We weren't looking at one schematic, we were looking at another. And what I mean by that is, if you have a look on screen, you can see the spring, okay? We were expecting potentially this kind of schematic here, whereby you get the secondary test and then the market goes up. But we soon realized when it took us out for break even on the first trade, we were likely to get a spring. And what we mean by a spring is really a secondary liquidation of positions, which breaks all structure, goes down, and then goes back up. And just before we do go down to a lower time frame, guys, you can see what we mean here about structure. If you have a look at this little diagram at the top right here, what we can see here is an area of consolidation or support, okay, with the green line being key structure. We can see that key structure was invalidated just like it was here, okay, same story. And there's our spring, there's our Wyckoff schematic playing out. We have sort of a W pattern. You sometimes get this in between trading sessions, whereby the Asia session looks like this at the top. You get the London session, which creates the low for the day, and the New York session will retest that low before going up, okay. There's lots of different ways to conceptualize the FX market. The FX market is fractal, which means it's broken down into lots of different individual parts, which means you can look at the market in the same way on the 1 minute time frame as you do on the 4 or daily, okay. So yeah, you may not have come across that before, and if you want me to do a video on trading session manipulation, please let me know in the comment section below. Okay guys, so here we are on the 1 hourly chart, and I just want to walk you through exactly what was, I guess, the thought process in terms of taking these two trades. The first one that was taken out for break even, and the second one ultimately, okay. In terms of the first one, we were looking at a 15-minute chart. We got out our order block Fibonacci. If you're not familiar with that, check out part 1 of our video series, which basically breaks that down. You can see we came very close to the halfway mark, which is our entry basically, and we had a long position right there, okay. We had a very tight stop loss, just less than 20 pips or so, and TP1 was around here, okay, for 2, and I'll go on and so forth really in terms of TP2 and 3. So with all of that being said, we were tracking price action very, very closely, okay guys. Let's just see exactly how it played out and what we were thinking, okay. So here we are, we're tracking price action very closely. We're looking at the charts, we're expecting the market to come back down to its level, to retest it and then go back up. We're starting to see a liquidation, okay, of positions. We're starting to see bearish price action. Here we go again, a nice candle. It's pushing its way down, it's creating lower highs, okay. This was the candle that we were very happy to see, and if I just pause it here, it might sound counterintuitive, but we were very happy to see the candle that you can see here. This candle gave us all the confirmation we needed that the market was being, I guess, pushed down to induce liquidity once more before going up, okay. I guess it sounds counterintuitive again, but it's how the markets work on a day in, day out basis, okay. And what you could see from a high level is that the market was itching to go back up. It was starting to create this kind of pattern here, and we were tracking the underside of this trend line, okay, just for an indication of where the market could go. And I guess on top of that as well, we had a nice little confluence here in terms of structure. We could see the market was really fading down in terms of a short-term move with the long-term objective of going up. If we just go back up to the 4-hour chart, let's just take a step back and see exactly where we were. So again, looking left, we had the retail stops liquidated. We had a brilliant position here. Here it is actually demonstrated our actual position. Let's see exactly where we entered the market. Here we go, stop loss of 32 pips. Okay, so here we are guys towards the end of the video now, just summarizing why retail traders suck and why the retail trading mindset will never work. Support and resistance, Fibonacci, lots of confluences around here, so-called confluences. It goes down, just like we discuss in our trading guide, okay. And we can also in our PDF guide talk about the delusion of FX traders and why so many of them think they can succeed and why so many of them don't. And I guess the hard truth, the flip side for retail FX traders, what you really need to know guys to be successful in this market, okay. And if you want to get your hands on that PDF guide, like we said before, we'll hit 50 likes. Please like the video and we'll release the PDF guide free of charge on our YouTube channel. Part 1 of our video has already released the PDF strategy guide, so please download part 1. Your guide is waiting for you. And I hope this video was really helpful, okay guys? And if you want me to cover more smart money concepts, order block strategy, or anything else free trading education wise on our YouTube channel, please let me know in the comment section below. If you haven't already, please subscribe, definitely like the video, and I'll see you on the next one. Take care, all the best, and good trading.